Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSE, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. The securities quoted are for illustration only and are not recommendatory. This video is not meant for any investment action or advice. Any examples of stock talked about in this video are only for educational purposes.
In terms of how you should be looking at crude prices, also gold prices, with that rebound also really reflecting through. Let's get Dinesh Somani, founder of ProIntellitrade Services, to join the show as well. And he's going to be talking about how this entire roadmap seems to be changing a little bit, Mr. Somani. You know, when you talk about crude prices, and we were just talking about the $100 a barrel level the last time that we spoke being a very important level as well. Just wanted to try and understand if you think that there's more pain in store for crude as well, because deal optimism really is not showing all that well for oil prices.
Yes, definitely $100 a mark was definitely a sentimental level. It got broken today. More or less it was expected because prices were facing resistance around $110, and from there it collapsed below $100 as of now. I think a further $2.5 to $3 fall would be likely. Around $95, $96, I think Brent crude should stabilize, and the WTI crude anything around $89 to $90 should stabilize. I think prices are going to stabilize out here unless and until there is a clear picture on the ceasefire and the ease out of the geopolitical tension. I think probably in a day or two, things will be more clear, and we may expect prices to stabilize out here as far as crude and WTI crude is concerned.
No, absolutely, you know, and that makes a lot of sense in terms of how we should be looking at prices as well right now. But I also wanted to try and understand what you think about where from here, right? Do you think that, as President Trump as well has highlighted, that prices are going to be falling as, like a rock, and you're going to see crude prices at levels that you haven't seen in recent times after the deal optimism really comes through and there's an actual deal that comes by? What do you think about that? What are the worst case scenarios that you're pricing in right now?
I think 110 is that the worst case we have already gone through. Probably we would be heading towards $88, and I think things are going to ease out further. With the easing out the geopolitical tension, I think things are going to stabilize and prices are going to fall further. I don't expect prices to cross the previous high of $110. So overall, I think things are going to stabilize, prices are going to cool off, inflation is going to ease out from here. Probably the currency is also going to stabilize out here.
And thank you so much for helping us out understand in terms of what really is happening with prices, right? But going forward as well, Mr. Somani, do you think that higher for longer oil prices is something that you're penciling in at this point in time?
I think they've already gone through the worst thing. Probably things will stabilize, and crude oil prices should fall below the 90 level mark as well. So overall, I think the worst is behind us. Things are going to be easy from here, and definitely there is going to be impact on inflation easing out for the other crude oil prices.
Makes a lot of sense in terms of how we should be looking at prices as well. Just wanted to try and understand what you think about gold prices also, given that entire rebound that you have right now. When it comes to gold prices, you do have a little bit of a rise that you're looking at right now.
Today we got a bit of relief rally. Prices went up below $4,500 mark. Now they're trading around 4560 levels. Overall, I think 4600 should be a major resistance zone as of now. Things are definitely under pressure, but if you look at the Indian market, the rise in 9% of the duty and the depreciation of the rupee, that helped out in the Indian MCX market prices to reach out to 1,59,000 plus levels. But overall, I think there could be pressure at these levels. Prices are going to fall further to below 4,500 level mark. As of now, 4,600 stands as tough resistance.
No, absolutely, and that makes sense in terms of how you should be looking at it as well. But just wanted to try and understand what you think about somebody who's looking at fresh buys. You do have the festive season that's going to be coming in soon as well. Do you think that investors who are looking at fresh buys right now, do you think that they should wait for the dust to settle a little bit when it comes to gold prices?
I think it makes sense to settle out a bit. 1,55,000 to 1,56,000 in Indian MCX market, that should be a fair level to go in for a fresh investment. As of now, I think the physical market is a way discount to the MCX prices. So it makes sense to wait out for at this point of time.
No, absolutely. And that makes a lot of sense in terms of how you should be looking at gold prices as well. Just wanted to very quickly try and understand if you think that the fundamentals seem to be intact when it comes to gold prices. Because, you've seen quite the slide coming in in terms of ever since the war really started. So do you think that that's really put gold prices in better footing right now when it comes to fundamentals, made it a little more attractive than it was previously?
Things are not happening that way actually. The geopolitical tensions are not adding premium to the gold prices. And basically people want to sit more on cash compared to the safe haven buying as far as gold is concerned. So that's the reason we are not looking at a very high level as of now. Overall, earlier it was very much clear that interest rates are going to decline in 2026. But as of now, there are possibilities and there are higher possibilities that there we could see one or two hikes in 2026. So that's the reason there is a pressure into gold prices.
Absolutely, and just in terms of silver as well, quickly wanted to just get a check-in as well. What do you think is going to be happening with silver prices? Do you see them moving, mirroring gold prices going forward?
Yeah, definitely they are mirroring to some extent, but overall, if I look at the M6 level, 2,65,000 stand as a very good support, and 2,80,000 stand as a resistance. If I look at COMEX level, $79 to $80 is a major resistance level. Simultaneously, $73 stands as a support. Overall, I look at it, 280 should be a good selling level. Downside again to 70. Overall, a range bound of 265 to 280 levels.
Absolutely, and just wanted to get a very quick check also going as far as copper is concerned before we let you go. Is there anything that's seeming attractive beyond, gold, silver, and some of your precious metals when it comes to industrial metals, be it copper or any other metal?
As far as copper is concerned, I think it is again range-bound in line with the silver prices. 1330 downside is a good support and 1355 is the resistance as of now. A movement on the either side will decide the direction, but compared to copper, I feel aluminum and zinc are performing very well. From the levels of 300 to 390, almost a 30% gain in last 70 to 80 odd days in aluminum and zinc as well. They are performing very well. I think 368 level is a good and attractive level to buy zinc. Overall, expecting a target of 380 plus. And simultaneously, aluminum, anything around 380, 382 level with upside target of 404.
No, absolutely. And thank you so much, Mr. Somani, for taking time out and joining us this afternoon.